All right. Sovereign gold bonds, SGBs. We're diving in because I know you're curious.
Lots of buzz around these.
Yeah. Smart way to invest in gold, some say. But are there downsides?
We'll break it all down today.
Absolutely. Let's do that. So first things first, what are SGBs?
Okay, imagine this. You're getting a digital certificate from the Reserve Bank of India, representing basically your gold investment.
Ah, so no hiding gold bars under my mattress.
Exactly. It's investing in gold without actually holding the gold itself.
That's convenient. I bet that appeals to a lot of people. So is there like a minimum you have to invest to get started?
Yeah, good point. The minimum is, think of it as 2 grams of gold. It's designed to be, pretty accessible.
2 grams. Okay, that's less intimidating than I pictured, but I've heard some people, they're a little hesitant. They're worried SGBs might be a scam.
Right, I've heard that too.
Yeah.
Got to address that.
Yeah.
These bonds, they're backed by the Indian government.
So.
Super low risk of default. Not some, shady scheme.
Okay, good to know.
Millions of Indians, they've already invested. It shows a real trust in the program.
That's reassuring, for sure. Plus, like we said, the convenience. No worries about storing gold, keeping it safe.
Huge point. Security and storage are big concerns with physical gold.
Right, absolutely.
SGBs, they just take those risks right out of the picture.
Okay, so we've got convenience, government backing, all that. But what about returns? Do these SGBs, do they have the same potential as, just buying gold?
They do. Their returns are directly tied to the market price of gold. So price goes up, your SGB value goes up. Same wave.
Got it. You ride the gold wave. But is there, anything else that makes these SGBs extra attractive?
Actually, yes. Besides the gold price thing, you get an annual interest of 2.5%. It's fixed.
Wait, 2.5% guaranteed on top of potential gold gains?
Exactly.
That's tempting.
But gotta be real, gold prices can be volatile. They go up and down.
So not a get-rich-quick scheme, then. Needs a bit of patience.
You got it. For the full benefits, you got to hold on to those SGBs. The lock-in period, it's 5 years, maturities after 8.
Okay. You mentioned volatility earlier. Historically, how has gold performed when, the economy gets a little shaky?
Great question. Gold has a long history of being a safe haven asset, especially during economic downturns.
So when things get tough, gold's the place to be.
Often, yes. It tends to hold its value well when other investments might be struggling.
Interesting. Can you give us some examples of this safe haven effect in action?
Sure. Back in the 1970s, the U.S. saw rampant inflation. Gold prices, they skyrocketed. Same thing happened during the 2008 financial crisis. Stock markets were plummeting, but gold held steady.
Wow. So it really does have a track record of weathering the storm.
Precisely. And that stability is a big reason why gold is seen as so valuable, especially during uncertain times.
Makes sense. So we've talked about gold in general, but how do SGBs stack up against other gold investment options? What about those gold ETFs I've heard about?
Ah, yes. Good point. Both SGBs and gold ETFs give you exposure to gold prices, but there are some key differences.
I was thinking about that 2.5% interest on the SGBs. That seems like a pretty big plus.
It is, definitely. And there are also some nuances when it comes to taxes.
Taxes. Always got to think about taxes.
Right. So the interest you earn on SGBs, that's taxed as part of your income. But here's the good part. If you hold your SGBs till maturity, the capital gains. Totally tax-free.
Oh, that's significant. That's different from other gold investments, right?
You got it. Most other gold investments, you'd pay taxes on those capital gains.
Yeah.
So holding on to those SGBs until maturity, that can make a real difference.
Okay. Starting to see the appeal here. So we've got security, potential for growth, tax benefits, anything we haven't talked about. Are there any downsides to these SGBs?
Good point. Got to be balanced, right?
Yeah.
Every investment has its nuances. One thing to consider with SGBs is liquidity. Yeah, you can technically redeem them after 5 years or trade them on something called the secondary market, but they're not as readily convertible to cash as some other investments.
So if I need money right now, SGBs might not be the best bet.
Probably not. Think of SGBs as more for long-term goals.
That makes sense. You mentioned the secondary market. What exactly is that?
So let's say you need to access your investment before the maturity date. You can actually sell your SGBs on this secondary market, which is basically a platform where investors buy and sell bonds from each other.
Ah, like a marketplace for bonds. So what determines the price of SGBs on this secondary market? Is it fixed?
It's not fixed, no. The price is influenced by several things, including the current market price of gold, interest rates, and even just the overall market sentiment.
So a bit of a gamble if you need to cash out early.
You could say that. It's not guaranteed.
Okay, good to know that option exists, though. So we've covered a lot of ground here. We know what SGBs are, how they work, the good stuff, the stuff to watch out for.
This has been a good overview.
It really has. One more thing I was wondering about. We talked about the Indian government issuing these bonds. Is there a reason behind that?
Oh, absolutely. There's a bigger picture here.
What do you mean?
Well, India is one of the biggest consumers of gold in the world.
Yeah, I knew that.
And a lot of that gold, it's imported, which can be a strain on the country's economy.
So by encouraging people to invest in SGBs, they're hoping to reduce those gold imports.
Exactly. It's all part of a strategy to kind of manage gold consumption in the country.
Yeah.
It's not just about individuals benefiting. It's about the overall impact on the economy.
That's really interesting. Okay, I think we've laid a solid foundation here. We understand the basics of SGBs now.
Definitely. Ready to dig a bit deeper.
Absolutely, let's do it.
It's interesting. This whole idea of gold as a safe haven. Like centuries, people have turned to gold when things are uncertain. And it's still a thing, you know?
Yeah, it's like this deep-rooted trust in gold, passed down through generations across cultures. But with the rise of digital currencies and all, I wonder if that's changing.
Oh, for sure. It's a big question. On one side, you have cryptocurrencies, Bitcoin, for example.
Right.
Some people see that as like a digital gold.
Right.
But then you have SGBs, which in a way, they blend the stability of gold with, the convenience of digital. And they're government-backed.
It's like a bridge, almost, between the old way and the new way.
Exactly. So it really makes you think, right, about the future of finance and security in this whole digital age. Could SGBs, with their unique features, play a bigger role? I think it's definitely something to watch.
Yeah, lots to ponder there. So to recap, SGBs seem like a convenient, potentially profitable way to invest in gold. And with the backing of the Indian government, that adds a layer of security. But for someone who's hearing about SGBs for the first time today, what are the key things they absolutely need to know before jumping in?
Okay, first off, SGBs are considered low risk, but they're not no risk.
Right, so that 2.5% interest, it's not like a guaranteed win.
Right, gold prices can fluctuate. You got to be okay with that. Second thing, investment horizon. Are you in it for the long haul? If you're looking for quick gains, SGBs, probably not for you.
That patience thing again?
Exactly.
Yeah.
That 5-year lock-in, it's there for a reason. And lastly, I'd say do your homework. Dig in the tax implications. Understand that secondary market thing if you might need to sell early. Compare SGBs to other options.
Solid advice. Always good to do your research before making any investment decisions. Speaking of taxes, we mentioned those tax advantages if you hold your SGBs until maturity. Can we break that down a little more? I bet some people are wondering if there's a catch.
Sure, happy to. The interest you earn, that's taxed based on your income tax bracket, nothing unusual there. But the capital gains, when you redeem at maturity, those are tax-free.
Okay, well, that's a big deal.
It is, different from other gold investments. So yeah, holding those SGBs until the end could mean more money in your pocket.
Now, I know some listeners might be thinking, what if I need that money before the SGB matures?
That's where that secondary market comes in. You can sell your SGBs on exchanges even before they mature. But the price you get might be higher or lower than what you initially invested.
So there's that risk element again.
Right. Just something to be aware of.
Got it. Earlier, you mentioned SGBs maybe playing a part in, the future of financial security in this whole digital world we're living in. I thought that was really interesting. Can you elaborate on that a bit more?
Sure. The way we think about money, investments, it's changing rapidly, right? Crypto, digital platforms, everything's shifting online. And in all of that, SGBs are kind of unique.
Yeah, we talked about that bridge between old and new.
Exactly. They combine this age-old trust in gold with the convenience of a digital asset. And the fact that they're government-backed, that adds another layer to it.
Makes you wonder what the future holds for them.
It does. Could they become even more popular? Could they offer some stability in a world that often feels very, unstable? Lots of possibilities.
Definitely food for thought. Okay, we've really explored the world of sovereign gold bonds today. Features, benefits, downsides, even the bigger picture stuff. As we start to wrap up, what are the key takeaways you want our listeners to walk away with? So we've definitely debunked that whole SGB scam idea.
For sure. They're a legit investment, backed by the government. Plus, that 2.5% interest, tax-free capital gains at maturity.
Yeah, those are big perks. But like we said, gold prices, they can be a bit unpredictable. Got to be in it for the long haul.
Absolutely. Patience is key with SGBs. It's not about quick money. It's more about a strategy. aligning yourself with gold, which historically, tends to hold up well.
Right, that whole safe haven thing. Even with all the new digital investments popping up, gold still seems to be a solid choice.
It's pretty amazing, isn't it? Gold has this enduring value. It's weathered so many economic storms.
I think that's why people turn to it when things get uncertain. It's almost like an instinct, deeper than just numbers on a screen.
Yet gold has a story, a history. And SGBs, they're a modern way to tap into that.
So for our listeners out there, maybe thinking about adding SGBs to their portfolio, what's a one piece of advice you'd give them?
I'd say go beyond the hype. Do your homework. Really understand SGBs, the risks, the rewards, all of it. And most importantly, figure out if they fit your goals, your risk tolerance. It's about what's right for you.
Excellent advice. Well, folks, we've covered a lot of ground today. We've explored the ins and outs of sovereign gold bonds, and hopefully you feel more informed about this unique investment opportunity. Remember, knowledge is power, and the more you know, the better equipped you are to navigate the complex world of finance. Until next time, keep those minds curious and keep exploring.